Hello and welcome to ATC's podcast. This is going to be podcast number 14. This is the only podcast on YouTube about tape reading, and we're all tape reading focused. So, a couple announcements before we get started into this podcast. We have night reviews at 8 p.m. Eastern Standard Time, and those are currently free to anybody. And we're just going to be reviewing the trade of the day or any trades or topics or journals that happen through the day with our students. And also, all new chat room members get our 1 through 4 course, which is 20 hours of previously recorded class material, and it's the foundation for all of our trades. With that being said, it's my pleasure to introduce Rich Lepis, CEO of Ahead of the Charts. Rich, how are you doing?
How's it going, Dave? Pleasure to
It's
be here as always.
Yep, loving the series. Let's just jump into it. I mean, we just got done, or we're still working through, just about almost done with our classes here. We
Mhm.
really focused on calculations based upon the tape and, following a market maker and just setting up calculations to take the thinking out of it and really subtract the noise that really comes in with the tape, because it's a blessing and a curse knowing what a stock needs to do, but also there's a lot of noise that comes in within the tape. And we as students, get very, very confused off of something that comes in the tape that might, you know, distract us from our full game plan or take away from that game plan. So I kind of want to, the first question I really want to dive into is, we're going to take it back a little bit here, is can we break down a quick summary of how we go about calculating, price targets being calculated based upon controlling prints, just for those out there that we're not in classes, just a quick summary of how we do that.
Absolutely. So we have to start with print personality. So my definition of print personality is the average amount of prints that come in that a market maker need, the amount that they need to make. So print personality essentially, so we have to start first with our increments. And what our increments are, and it's a very simple way to use almost any platform out there, is that whatever part that you have up on the chart is going to show you numbers on the side. And whether they're going to be anywhere from 10 cents, 20 cents, 50 cents, a dollar, $2, so on and so forth. So if the increments are trading at 50 cents, the average amount that a market maker shows their burst needs to make 50 cents. So it's very simple to calculate. Ask prints, we know if we get ask prints that are either at or above print personality, it's going to have to pull back. So those increments are going to allow us to calculate exactly what the chart's going to look like in the future. So let's say print personality is 5, and we get 5 ask prints at $5. And I always use that $5 mark. Well, we get those 5 ask prints at $5, and the increments are trading in 50. That's taking into account its range and how much it typically is going to move. That basically tells us from 5 that we need to pull back to 450 for the stock to then go to 550. And you might ask, why would they buy at 5 and then have to pull it back first before it goes to 550? And it's so simple, because they're building. Anytime we see prints that come out that are obvious, it's a tip of the iceberg. So if there's 5 prints, that's just showing you part of their position. So what they're doing is at that 5 level, they're going to come in, they're going to buy those prints at 5, but as it's coming down to the 450 level, what they're going to end up doing is they're going to be building more of a position. They're going to be buying more shares. Typically, a retail trader out there, when do they sell?
They sell on those hammer bars when they get, the market maker build.
When the stock's going down.
Yeah.
Whether it's going to be hitting stops, stops. And when I say retail, I'm putting, encapsulating everything into there. But it's going to be hitting stops on the way down, which they're going to be able to acquire those shares. It's going to be continuous. So by the time it gets down to 450, let's say at 5 they had 100,000 shares, just make up numbers. By the time it gets down to 450, they probably have about 350,000 shares at that point. Now they're ready to release it. And when the calculation itself tells us the stock needs to pull back down to 450 to actually build. So when it's time to release it, that's what we call money time. So now we're going to see a trigger start coming back up, but going back to 5 doesn't give them money on the prints that they originally put out at that 5 level. So we go back to our increments. How much did that person need to make at that 5 level? 50 cents. So technically, if we're looking for a long trade, we'd expect it to pull back down to 450 and then go up to 550. Obviously, there's a lot more that goes into this, but that's just simple how calculations work.
Yeah, so that's kind of the simple breakdown. Obviously, there's a lot more variables that go into it, having a complete game plan with those calculations, obviously. But how do we go about combining calculations and personality. Because something I've noticed within our students is, okay, we've been focused on calculations. They're starting to get more mindful and conscious of creating them, and they'll see the prints and they'll be like, okay, increments are $1. This needs to pull up at least $1 and then come back down, and for the market maker to make money on that position. So how do we go about combining personality? Because it's obviously cases where we have exceptions where stocks don't pull back from the prints at the level, even though those prints are above print personality, and they show us that eventually they need to pull back. So how do we go about using calculations and personality in tandem to create high percentage trade?
So personality, and we literally just did this in class, personality basically falls on a scale from building to money time. When
Hmm.
we talk about money time, we talk about those stocks that have those beautiful the trends, just basically no move down. They're just, continuing up, or it could be on the opposite side. It could just, be basically going straight down, very rarely having pull-ups. When we go to a building type stock, essentially we're going to see a lot of the stock hitting a certain level, coming back down to build, stock hitting a certain level, then coming back down to build, so on and so forth. So when we ask that question about personality, first of all, we need to understand what the personality is, which is a whole class within itself.
Hmm.
But really, at the end of the day, what it's going to come down to is short-term prints, because we get so focused on our controlling prints. Controlling prints give us our direction. It tells us what the stock needs to do now and what it needs to do overall. But short-term prints, which are typically going to be at a cent, 2 cents, 3 cents, 4 cents, 6 cents, 7 cents, 8 cents, and 9 cents. So not at fives and zeros on there, but those short-term prints that are coming in are telling us positions are happening right now. So you can tell a lot about the personality of a chart of what a stock really is just by seeing what those prints are. If you're getting a bunch of controlling prints coming in at levels and you're never really seeing reactions, or you're never really seeing any type of shorter term prints coming in around there, we can assume it's going to follow the rules. That same example, the $5 gets hit on the ass side of things, increments are 50 cents, pulls back down to the 450 level, then goes up to the 550. That's a perfect case textbook scenario of how calculations work. But if we're at that same 5 level and underneath at, let's say, 497, and then above at 503, we're seeing a lot of these short-term buying prints coming in. Our expectations of those calculations are going to be different now, because those people coming in are now in conjunction. We have to assume all of our market makers are always right. If you're not right as a market maker, you don't have a job anymore. Okay, so we have to assume every market maker is going to be right, not just the controlling prints market maker, not just the shorter term print. Every single market maker is going to be right. So when that person says, I need to pull back from 5, when we have all those shorter term prints, now, even though the increments are 50 cents, now we're looking for more of a 25-cent pullback, because those prints are what's going to tell us that this is going to happen a lot quicker. So we start off, and this is the problem. A lot of traders, they start off with their calculation, and that's all that's in their head forever now.
Right.
This is what needs to happen off of that. But they fail to take in those supporting type prints. They fail to look for those shorter term type prints that tell them that this stock doesn't have to pull back as much.
Hmm.
Because it doesn't make sense for market makers to fight each other. Does it happen? Of course it does. But for the most part, it's this almost utopia of just a lot of people with tons of money making money, and a lot of people that don't have tons of money, they take it from them, the retail versus market makers. So really it comes down to huge, the personality of the stock first comes in with the prints. So you have to understand and really focus on what's that printing personality. If every time it's coming to a level you're getting shorter term prints, pullbacks are going to be a lot more limited. If every time it comes to the level and you get no short-term prints, well, now it's going to follow the rules as if a stock that was just, a regular day of trading. So it's really, everyone tries to find the personality on a chart. And I'm going to tell you something, it's the best way to find a personality. But the problem that lies there is you have to wait for the stock to be trading for a while before you can see that, because that's looking at the chart. So the chart shows you this personality, which is great at 10:30, 11, at noon. But what about 9:30? What about 9:36? 937, the beginning of the market when we have that the most volume. There needs to be a transition into focus of the prints and understanding what the actual chart is going to look like. This Tuesday, we did a class where I took away the chart. I took away everything but time and sales. I believe it was this Tuesday. I forget which, either way, it was either, end of last week or early this week. And we did a class. I took away everything but time and sales. And I brought up paint. As you guys know, some of the students know, I like to bring, just simple, not these elaborate, PowerPoints, simple, just lines. This is what it is. And I brought up just time and sales and that paint program. And as the prints were coming in and as we were analyzing them, we drew the chart ourselves. And once the trade was over, we pulled up the actual chart and we were dead on. But we knew all those things were going to happen before they happened. So really what it comes down to is the personality. Everyone, you can wait for the person. There's no better way to see what a personality of the stock is, than by looking at the end of the day what the chart looked like, because that's exactly what happened. That's what its personality was. But we have to start to focus on what different types of printing personalities look like. And I know that's kind of a confusing way to put it, because print personality is the average amount of bursts that come in a market maker's execution. When printing personality, does it only print at major levels? Because then it's going to follow the rules. Okay, does it only print at off level or shorter term type prints? Well, that's telling us that we're pretty much going to go straight up. Now, does it have a mixture of both? It's, again, we have to put it on the scale. Okay, versus printing only at major levels versus printing at minor levels, and then there's a middle, the middle ground is going to be a bunch of movement with a few consolidations. So we really have to be able to start to understand the personality of the time and sales to really get what the chart is going to be. And it's something that a lot of us kind of get caught up with.
Mm-hmm. So that example you gave with the 5 ask, and then you have the reaction above, say 03, and we would adjust our calculation because of the way the personality within the tape tells us that we're not expecting that full pullback. But the question I had is, does those off level 03s extend our price target, or do they just allow us to define timing rather?
So they do both. So timing definitely, but when we get off level print, so there's a difference between taking a position to build and taking a position because I'm going to make money. So as of 90% of retail traders, and then start adding market maker day traders into this, when they take a position, when do they want to make their money?
Relatively soon.
Yeah, like when we get into a stock, we're not looking for it to go down 20 cents first before it's because we're expecting it to happen at that moment.
Yep.
So an off-level type burst, unless it's way over print personality, if it's around print personality, we can only expect the exact increment to go from there. So we know that it needs to, let's say it's 503. My expectations now, even though the 5 told me we need to get to 550, the 503 tell me I need to get to 553. Because that's just one position. That's a position to make money on the move that the dominant market maker is controlling.
Right.
So that doesn't give us extra unless, let's say we get up to 547 and we get a bunch of great prints. Well, can't really do much with that yet until it hits 550, because we need to see what happens at the major level. But let's just say the major level, nothing happened at 550, which doesn't typically happen, but let's just say that happened. Well, we get those prints at 547. Guess how much they're telling us that they can make, or how much they need to make? They need to make 50 cents. So now we're at 597. Now we also have to take into account on a position, are they going to make the full 50 cents? Probably not. So right around 590, we're going to start to see that slowdown without having any controlling prints or a dominant market maker coming in at that 550 level. So those prints within themselves have to be taken as just a position to make money now based off the increments we have. They don't extend it further. Now, there is a little bit of a difference, because let's say 40 people come in at 503. Well, now we have a lot of buying. Yeah, the price target's going to go higher from there. But we're talking off just basic burst prints. We have to start there to understand the foundation to be able to, to extend it and elaborate on it as we see more coming in. So just that print personality, that person needs to make 50 cents. If they're way over print personality, they're going to have to make more than 50 cents depending on what the print personality is and what the calculation is going to be.
And I think this fits really well into the next transition for the next question I have, which is trade management. So something that I still struggle with as a progressing student is how do we manage a trade that has hit our conservative price target? So say in this case we hit 550, but we did have those 503 and we had those 47, and say we have not as much ask at 550 as there was at 5. It shows a lot less of a building time frame of things, and we do have the shorter term that suggests that they're looking to make money. How do we manage once we hit 550? Say we're already in under, we're better position than market maker, we're in under 5, it triggered, give us that nice pullback, triggered up, and now we're at 550. How do we proceed to manage our position? What variables do we need to keep in mind?
So the way that I'm going to answer this question is a way that it needs to be thought about. Is first of all, what's a price target? So many people set price targets, but they don't actually think about what a price target is. A price target, in my opinion, really means that by what you saw getting into this trade, this is exactly how much money I should make from that. Okay. So getting into that trade, if it hits that number and we close out our entire trade, we did exactly what the stock told us it was going to do. Now, as we know, as it starts to get to price targets, sometimes more will come in and tell us that we can continue further. The way that I put it is like that proverbial passing of the baton. If you ever seen a relay race before, as they're running, the circle, the next person gets the baton. So you need that baton to actually be passed. One of the things that I can't stand when a student sends me their journal is that it hit their price target, went above their price target, and then they ended up losing a trade. So I'm going to give you a real quick and easy rule of thumb to take all thinking out of it. If you have a price target, so let's say it's 550, you get in at 450, obviously it would be higher than that, from the trigger, but let's say, 463. And the stock is now at 550. If it breaks above 550 and comes underneath, need to take off exposure. Have to. Because the stock the person you're following did exactly what they said they were going to do. But now the percentage of exposure that you take off is going to have everything to do with that 550. Because if the 550 ask prints are way over print personality, we're going to get a huge pullback. There's no reason to give up 50 cents of my profit just to give it up. So in that case, the percentage that I would take off at that 550 or when it broke underneath 550 is going to be a lot more than, let's say there's print personality is 5, there's 5 prints at 550. Okay, I don't need a huge pullback on that. When it comes down to managing your position once you're at the price target, again, it comes to the short term, because 550 just alone tells us stock's going to pull back. Right now, if at 63, we're up our certain amount. I'm not going to let it go 50 cents back on me. Just not going to happen. But if we get some 550 S prints, as we get to that level where the baton, and the way I see it as price targets, that's a level that the baton would need to be passed to be able to hold on to our trade to continue going. So if there's no short term around that area, my percentage that I'm going to be taking off go way higher. If we have short term, they're going to go way lower. Now, there's also other things that we have to bring into it. Statistically, with the way the stock is trading, will I get another entry? So our trigger personality, when we see, are our triggers working out, all day long, or do you get a trigger, it comes back down, and it really needs to be calculated? So if I'm going to get another entry, my percentage is going to go a little bit lower than it would be if I'm not going to get another entry. So it's really managing it, again, just on a scale of what we see. But at the end of the day, especially as a newer trader, if you're, let's say, 550 is our price target. If it goes to 556 and then breaks underneath 550, there should be some amount that you're taking off. Because what that does is it eliminates the greed factor. And, you're a trader and I've watched, you trade. So I know you're the same way as I am, as every other trader that I ever met. But the second a stock gets to your price target and you're winning, what's human nature tell you want to do?
You want to lock it in.
No, so it's actually the opposite. I want to get great. I want it to keep going higher.
Okay. Yeah.
I'm in a successful trade at this point. So now it's at 550. What about six? Now I'm seeing my P&L going up. What about if it got 650? What about seven? What about 98? If we could get that huge run that's coming into it. And that's what it leaves us to do. But in all reality, when you click that button, where were you supposed to be? 550.
Mhm.
Now emotion comes in because we have this big winning trade. It hit. Now I'm not talking about your price target being 10 cents from there. I'm talking about it pulls back to 450, a real trade. But now, I'm up, what, 80, 87 cents. And it's like, well, what about if I was up $1.03 or if I could be up $1.50? Now we start trying to make up reasons for the stock to continue to go back in. And it still does work on the opposite side of things where you see, students where the second hits price target, I'm out, 80%.
Mhm.
That's not the right way to trade either.
Yeah.
Because if something tells you it's going to happen, but it comes back down to being different levels of traders as well. If I'm a level 1 or 2 trader, when it hits my price target, I probably should take off a lot, build that confidence, because this is my learning phase. I'm not in here to make money yet.
Yeah.
Now, if you're a 7 or 8 trader and you're still taking off the second it hits your price target, now we have a problem. Because now you're not managing what the stock's telling you. You're managing what that one person told you,
Yeah.
which you can't go wrong with.
Right.
But to be an elite trader, you got to start to, read between the lines a little bit.
Yeah. So I kind of boiled them down to three kind of bullet points criterias of the trade management is one, you have the habit of getting out way too much before your price target.
Hmm.
And I think the psychology behind that is you just still don't have that confidence. You're still in the learning phase.
A lot of losing trades.
A lot of losing trades. You probably hold. I think Doug said it pretty great. He said if you're getting out way too much before your price target, I bet you're probably holding your losers too long, which was an interesting one. That sticks with me a ton. So that's one of the cases, and then the other case is you're getting out all or too much at your conservative price target, and you'll see it. Sometimes the stock will run, sometimes it'll be on point, what have you. But that's a
Still a
consistent.
little bit of a confidence issue
Yeah.
because now it's not, I don't want to call it laziness, but it's a confidence issue. Now that it's at that point, you don't have the confidence in being able to read further into it.
Right.
You made a good read in the first place, but for some reason don't trust yourself reading it again,
Right.
which
So
is something that again comes with kind of that time.
yeah. And then the last one being the one we went over, or you went over, was letting it hit your conservative price target, but you become that greed factor kicks in and you just want more, but then it ends up coming back to your breakout
Which
point.
can't happen.
Yeah.
And so when I say that can't happen, if you're going to get barred throughout your career. I don't care what trader you are. At one point in time, you're going to get this huge bar that gets you. But
Right.
if a stock is comfortably and manageably coming back down, so let's say 550 again is our price target, and it gets above that 550, and now it's coming back underneath, and you take nothing off, now you're just not even trying to manage.
Yeah.
At this point, you're just hoping for the best and seeing what's going to happen. And we know how that works out at the end.
Yeah. And I feel like a lot of people really feel like the trade is a failure if they don't hit a top or bottom, which
Mhm.
is an interesting psychology too behind that is why do you, I mean, as an elite trader, once you start getting to that closer to that 10, obviously there's no such thing as a 10 trader. Are you starting to actively be hitting those tops and bottoms, or is never going to be the case with perfect management like that?
So if you have enough shares, you can, but
Hmm.
now you're along the lines of a market maker. So if you're using enough shares, yeah, you could hit tops and bottoms, but 99.9% of people that are not sitting at Goldman Sachs or Chase, if you're trying to hit tops and bottoms, like, for instance, if I know a stock has another 20 cents to go, almost always that 20 cents is not worth it to me. I don't
Mm.
care about that extra 20 cents because the exposure and the risk that's there for that 20 cents once we get to that top's not worth it whatsoever. So no, unless you're trading hundreds and thousands of shares, tops and bottoms will never be for you ever. Our
Hmm.
goal is to take out a chunk of what their game plan is. And the reason that we tops and bottoms aren't for us is guess who creates them? Guess what we can guarantee is sitting there.
No question that market maker.
And why? Why? If you go to a beautiful beach somewhere, clear water, you can see 50 feet down. It's great. and there's two spots. One of those spots has sharks in it, and the other spot doesn't. Why would you in any way want to go swim with those sharks? Your risk is so much higher than not being around them.
Yeah. And at that point, you're not playing calculated.
No, and that's what it is. So, there's a difference between thinking I can make an extra 20 cents versus that 20 cents could hurt the hard-earned trade I already made. And so many people, it's, well, I could have made another 20 cents. Yeah, well, you could have also lost 60 cents on a bar.
Yeah.
And if you notice, most of those big bars, they don't come from the middle, they come from the tops, and
They do. They do.
so it's all about consistency. It's not about that extra 20 cents. Now, don't get me wrong, if the stock's supposed to move $1 and you get out in 30 cents every time, yeah, it is about the extra 20 cents. But when you correctly, calculate what needs to happen, that extra 20 cents on that trade means nothing because the risk is so much higher. And if you put that over time, you're going to see that you actually lost more of your profit by doing that than you did by getting out that 20 cents earlier.
Mm. Well said. Well, I think that definitely wraps up for it. We went over trade management, we went over personality and calculations. Obviously, it's all relevant to our current classes, but Rich, appreciate it for coming on. Always a pleasure. Always, learn new information. So thank you for taking the time.
All right, same here, Dave. Talk to you later.
Later.